Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about, all the FNOQs, what exactly is happening there. I'll talk about the general trade setup. Currently, if you're looking at what happened globally, not the best of cues that came in. US was rather flat in trade. Only the Dow managed to inch up slightly. But even if you're looking at Europe ended with a negative bias. Most of the Asian markets are trading with a negative bias. And the SGX Nifty is also indicating a negative bias. Currently, it's down almost 50 points at this point of time. Now, if you're looking at the ADRs, quite of them ended with a negative bias. Vedanta was down almost 3% in trade. Infosys, HDFC Bank and ICICI Bank also traded weak. What did well was Tata Motors. Tata Motors over the past few days has been doing well. Wipro and Dr. Reddy's also managed to do well in trade. The big talking point was crude. Crude was up over 2.5% in trade yesterday. It's managing to hold on into trade currently. So $77 per barrel is where Brent is, and WTI has moved above the $66 barrel per mark. As far as the base metals are concerned, positive close on the LME. Copper was up almost 1.15%. Tin was up over 1.6%. Negative reaction coming in onto aluminium, which was down over 1.5%. But China currently, commodity is not doing all that well. Aluminium is down in trade, steel is down in trade, and copper and zinc also trading slightly weak in today's trade. Flows, FIs were net sellers in the market yesterday. Let's see what they sold. They sold in 525 crores. DIs bought in almost 1200 crores in the cash market. But overall for the month, FIs are net buyers given the fact that they are buying in HDFC Bank. Nifty managed to move up almost 0.8%, but much more rally was seen on the broader markets on the mid cap side and the small cap side. Apart from it, if you're looking at the sectors that did well, the real estate sector was up almost 3%. Metal managed to move up almost 1.5% in trade. Given the fact that the market was slightly volatile, the India VIX went up by almost 2 percentage points. So that's what exactly happened. Overall contribution, the Nifty was up 85 points. Reliance, ICICI Bank, Infosys were the main contributors to the mover. Banks, private sector banks were slightly weak. But Agam, what are we seeing on the FNO side?
Well, a little bit of a change in trend from what we've seen in the previous few sessions. We've started to see accumulation in the Nifty futures. As you can see here, near 6% added there. And in the Nifty Bank futures too, well, we have seen an addition of around 3% towards open interest, but it was the indices which were strong in yesterday's day of trade. The VIX, of course, also moved up as much as nearly 2%, but this is largely on account of buying in the calls. But when you consider, the other factors in terms of the put-call ratio, that has edged up higher, as one might expect, to around 1.5. And in terms of changes in open interest, a little more writing coming along at 10,700 and 10,800 puts. So we're going to watch out for these two levels and see whether or not the Nifty, holds on to them. It seems like the indication is that the 10,700 is certainly going to be tested today based on the SGX Nifty indications. But let's also take a look at the way things are panning out across all series. As you can see, the 10,600 mark along with the 11,000 mark provides a range, so to speak, in the near term for the Nifty. And in terms of stocks, United Breweries sees more gains coming in and a lot of strength. And we've seen longs building there, and we also have stocks like Indian Bank that's also advancing. One stock that stands out on, should I say the losing end, this Volta is down 1.4%, shorts building up. But on the whole, we did see a substantially improving advance decline ratio, and it's a wait and watch whether or not that trend will hold or will it change today. But now let's go across to Paul Allen for the top international headlines from Bloomberg.
The IMF says it's reached a standby deal with Argentina for $50 billion in loans over 3 years in exchange for what it calls fiscal consolidation. It says the Macri government has agreed to a primary deficit target this year of 2.7%, with a CPI target of 17% next year and 13% in 2020. The IMF says the deal is still subject to executive board approval. Former Fed Chairman Ben Bernanke says the US economy could fall off a cliff. He's warning that growth faces a major slowdown as the Trump administration's fiscal stimulus starts to fade. He says the tax cuts and higher government spending make the Fed's job harder all round because it's all happening at a time of low unemployment. Bernanke says it could be a Wile E. Coyote moment, just like the cartoon, but it won't be funny.
what you're getting is a stimulus at the very wrong moment that the economy is already at full employment. So you're getting hit by a big stimulus, which under current law, we'll see what happens whether it's renewed or not, but in current law, it's going to hit the economy in a big way this year and next year. And then in 2020, the Wile E. Coyote is going to go off the cliff and it's going to look down, and that'll be essentially withdrawn at that point.
China's efforts to globalize its $11 trillion bond market are hitting dual headwinds. International borrowing costs are climbing just as Beijing works to reduce financial leverage. That's contributed to defaults by 12 bond issuers so far this year, compared with 18 for the whole of 2017. 11 of those have been private companies, while one was a state-owned enterprise. The 1MDB investigation is said to be ready to arrest financier Joe Low and 2 other people, including a former Goldman Sachs banker. We're told the Anti-Corruption Commission are yet to issue charges, and it's not clear why the warrants are being prepared. Malaysia says at least $7 billion went missing from 1MDB, and US prosecutors portray Low as a central figure in the embezzlement scheme. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
We'll be discussing today trade, and obviously we will be talking at great length on North Korea. We'll be getting some of your ideas. I'll be giving you some of our ideas. Things are moving along well. It looks like the meeting is set. The summit is all ready to go, subject always to change. You never know in this world, subject to change, but the summit is all ready to go. North Korean representatives are in Singapore right now working very hard, as are people from the United States, and it's all going along very fine. I hope it continues on this track. If it does, the world will be a very happy place. I think I'm very well prepared. I don't think I have to prepare very much. It's about attitude. It's about willingness to get things done. But I think I've been preparing for the summit for a long time, as has the other side. I think they've been preparing for a long time also. So this isn't a question of preparation. It's a question of whether or not people want it to happen. And we'll know that very quickly. I think it's not a one-meeting deal. It would be wonderful if it were. You know, they've been doing this for a long time. There's been a lot of enemies out there, a lot of dislike, a lot of hatred between countries. This will not be just a photo op. This will be, at a minimum, we'll start with perhaps a good relationship, and that's something that's very important toward the ultimate making of a deal. I'd love to say it could happen in one deal. Maybe it can. They have to denuke. If they don't denuclearize, that will not be acceptable. We cannot take sanctions off. The sanctions are extraordinarily powerful. We cannot, and I could add a lot more, but I've chosen not to do that at this time, but that may happen. By the way, with Iran, we're adding tremendously powerful sanctions. They understand that very well. I think Iran already is not the same country. If you look, I don't think they're looking so much to the Mediterranean like they were 2 months ago. So it's a big difference. It was number one nuclear, but also out of it, you also get the side benefit that Iran is a different place. And we'll see what happens, and maybe ultimately something will happen with Iran. But for our meeting next week, I think it's going to be a very fruitful meeting. I think it's going to be an exciting meeting. I think we're going to get to know a lot of people that our country never got to know. This is something that should have been handled many years ago by other presidents. It shouldn't be handled now. It should have been handled years ago. But it is being handled now, and I'll take care of it.
Let's shift focus to the commodity space and look what oil prices are doing, currently trading with a mild positive bias. But remember that we had a huge buying overnight session. So Brent was up about 2.6% last night, and we had WTI, which also surged nearly 2%. Now, what the investors are watching out for is the clues that will come out from the OPEC meeting, and whether or not OPEC, increases the output. Also, what traders will be watching out from the Russia and Saudi Arabia soccer match in the World Cup next week. And also we understand that Venezuela has written to other OPEC members to unite against US sanctions. As far as base metals are concerned, we saw most of the base metals close mixed. However, copper did manage to lead the index higher and close in the green for the 8th straight day. Copper has in fact hit its four-year high on the back of supply risk, and there are now more bullish bets than bearish bets in the copper market. Copper gained actually for the 6th straight day, and this was the longest rally that we have seen since December last year. As far as other base metals are concerned, we had tin, which was the top gainer in trade, ended about 1.7% higher. Aluminium, which was the top loser in trade, declined as much as 1.4%, while nickel and zinc also ended lower. If you look at the precious metal space, we are seeing some bit of uptick for gold prices ahead of the Fed expectation of rate hike, and we also had silver, which was in focus and closed at the highest level since April on the back of demand supply.
Well, bunch of stocks that we're tracking this morning. To begin with, we are looking at IIFL, where the IIFL sponsored REIT has received a certificate of registration for carrying on the activities as a real estate investment trust from SEBI. Also in the list, we are tracking in Omax Autos, where the company board of directors have given an approval to invest around 120 odd crore over the span of next 2 to 3 years to double the capacity of the company. Third in the list, IDFC too could be in focus, given that UK CDC Group has invested in IDFC Alternatives. That's the PE division that we're talking about, that the UK group has been interested in. Also, HDFC, which is in talks to raise as much as $750 million through ECBs. Also in bulk deals, couple of them that we're tracking this morning. First one to begin with, Ashiana Housing, where Goldman Sachs has bought in 2.8% stake in the company for a sum of around 43 odd crore. Also, we are tracking Indoco Remedies, where DSP BlackRock has sold in 1.6% stake in the company for a sum of around 29 crore. And also last in the list that we're tracking is Sharda Corpcam, where Goldman Sachs has sold in 1.5% stake for a sum of around 55 odd crore.
Finance Minister Piyush Goyal is going to meet heads of public sector banks today, and one of the agenda items for discussion is going to be the roadmap for consolidation of public sector banks. There are a lot of reports, there are a lot of media reports which suggest that stronger banks would be the likely acquirers of small public sector banks, small or weak public sector banks. But as far as the government is concerned, there's no official word as of now, and the government has maintained its stance that it is on track when it comes to consolidation of public sector banks. But any official announcement will only be made once the candidates for merger are identified and the nitty-gritties of the merger is finalized.
I believe informed and reasoned public engagement on all issues of national importance is essential. A dialogue is necessary, not only to balance the competing interests, but also to reconcile them. Divergent strands in public discourse have to be recognized. We may argue, we may agree, we may not agree, but we cannot deny the essential prevalence of multiplicity of opinion. Only through a dialogue can we develop the understanding to solve the complex problems without an unhealthy strife within our polity. The soul of India resides in pluralism and tolerance. This plurality of our society has come through assimilation of ideas over centuries. Secularism and inclusions are a matter of faith for us. It is our composite culture which makes us into a nation. India's nationhood is not one language, one religion, one entity. When I shut my eyes and dream of India, from Mizoram to Dwarka, from snow-capped Himalayan to way west was Cape Comorin. I mesmerize how it is possible 1.3 billion people use more than 122 languages and 1,600 dialects in their everyday life, practice 7 major religions in their everyday life, belong to 3 major ethnic groups, Caucasians, Dravidians, and Mongolites. Yet, under one system, one flag, one constitution, and one identity, which we may call Bharatiya, Indian. We derive our strength from tolerance. We accept and respect our pluralism. We celebrate our diversity. They have been a part of our collective consciousness for centuries. Any attempt at defining our nationhood in terms of dogma and identities of religion, region, hatred, and intolerance will only lead to the dilution of our national identity. As Saraswati Radhakrishnan said, any differences that may appear are only on the surface, but we remain a distinct culture, cultural unit with a common history, a common literature, and a common civilization, unquote.
Let's also get your check on the top 3 stocks that you need to keep on your radar based on yesterday's delivery buying and selling. The first stock on the list is Max Financial. Now that was up about 4.5% in trade yesterday and saw delivery buying of more than 50 crores. The delivery volume actually surged about 120% as compared to its 5-day average, and the total volume also nearly doubled as compared to its 5-day average. Second stock on the list is Sterlite Technologies. Now that was up about 8.5% yesterday and saw delivery buying of 75 crores. The delivery volume more than doubled as compared to its 5-day average, and the total volume also managed to double as compared to its 5-day average. Last and final stock, Steel Authority of India. After a long time, this has featured in the buying and selling list. Now that was up about 7% in trade and saw delivery buying of nearly 88 crores. The delivery volume, however, surged about 67% as compared to its 5-day average, and the total volume surged about 55% as compared to its 5-day average.
On the big brokerage calls for the day, first we have is Ventura Securities on BIKE Hospitality. Now the brokerage has initiated coverage on the stock with a buy rating and a target price of 351, which suggests a potential upside of 106% over the next 24 to 30 months. The brokerage is expecting the hotel industry to report much better performance than what it did in the last 10 years, and BIKE is well positioned to benefit from this uptrend in the hotel industry according to the brokerage. Now the BIKE Hospitality's asset-light business model, strategic location of its properties, and adequate new capacities in the mid-scale segment are the positives that will be benefiting for the company. Also, given the asset-light business model of the company, the return ratios of BIKE Hospitality is expected to remain at elevated level according to the brokerage. Now, given the uptrend in the hotel industry, the brokerage is expecting the company's revenue to grow at a compounded annual growth rate of 22% over FY18 to FY21, and the company has an aggressive room expansion plan. But despite this, the company's occupancy rate is expected to grow up to 71% by FY21 from 65% in FY17, and this rise in occupancy rate will lead to better operating leverage and higher margins for the company going forward. Second, we have is JP Morgan and Asian Paints. Now the brokerage has maintained its neutral rating on the stock with a target price of 1,300 rupees. Now according to the annual report of Asian Paints, the company's revenue growth outlook for FY19 is positive, led by the healthy domestic demand, which will be aided by the rural recovery and better performance expected from the overseas operations of Asian Paints. Now the major growth drivers for Asian Paints in FY19 will include expanded distribution reach, scale up of new retail formats, product innovation, and contribution from the new segments like waterproofing, home improvement, etc. On the challenges side, Asian Paints is saying that the rising crude prices is the only key challenge for the company in financial year 2019. And lastly, Asian Paints said that in FY18 their free cash flow and return ratios remain moderated owing to the higher capital expenditure plans of the company that it had in financial year 2018.
Well, lots to talk about over the course of the day. You'll find all the live market action right here on Bloomberg Quint Live, and also several stories on the website bloombergquint.com if you check it out. Here are just a couple of them. The Indian government has sought an explanation from Facebook by the 20th of June on reports that suggest it shared information of users with mobile device makers. In an official statement, the Ministry of Electronics and Information Technology has asked for a detailed factual report from the company, saying it was deeply concerned. And it turns out that the government will continue to pursue disinvestment of debt-laden Air India, and revised bidding norms are likely to be finalized soon. All right, that's all you need to know going into trade today. Up next is Indian Open, so do stay tuned. This is Bloomberg Quint.